Let me look at markets, and especially IFCI stocks. The government is looking at increasing stake at 10 rupees per share. Yes, the book value will increase, but if the promoter is ready to come at a substantial discount at the current market price, it just tells you the promoter, which in this case is Government of India, is not very confident. So the fact that they're increasing the stake at 10 rupees, that just tells you that in the near term, the owners are not very bullish about putting more money in this business. The reason why they're increasing their stake is because the company needs money, and if if fresh capital is not injected, then there would be a problem. Let's go to Mitesh for his mid-morning trading ideas. And Mitesh, Ashwini was bullish on Coal India before the bell, and after the bell, you are also bullish on Coal India.
Well, yes, I think, I was watching the stock yesterday as well, was bullish, but I just wanted to wait, as to how the stock reacts after some kind of a negative opening, and we have seen follow-up buying happening over there. My sense is that the trend should continue and possibly extend to levels of 375, and this one can be bought with a stop at about 355. The other one is a sell call on Asian Paints with a stop at 37.20 for a price target of 3500. And one is IFCI, I think, which we have discussed, that the stock has already met the target of 30, which I had identified about 33. But I think overall the downsides are still there to levels of about 26, which might happen in the days and weeks to come by.
Okay, just want to walk you through some other movers as well in trade, and let's bring up what is happening on the futures and options side of the market. MTNL, the stock continues to hold up. You're also seeing some traction build up for BPCL on increased talks of a petrol price hike this time around to the tune of about 3 rupees per litre in the first week of September. So BPCL is going good by about almost 1% in trade. Ashwini, a long-term bull like you on BPCL at 355, what's the trade that you identify?
Well, the stock has corrected substantially from higher levels. And, now probably it needs a decline in crude prices for the stock to recover. But around these levels, I think the risk reward is again favorable. So if you can take a 20 rupee downside, chances are that BPCL could get back towards levels of 385, 390. In any case, if you have to buy OMC, this is the best OMC to buy, but keep a clear stop about 325, 330, and you should get upside from here.
CAIRN India. Now, the world's bullish on CAIRN India. Fundamental market watchers, you heard Suresh Mahadevan, he's of the view that CAIRN India crude prices have gone up, net realizations will improve. They are looking at expanding their capacity, and things also will change for Coal India, for CAIRN India in the near term when it comes to the Mangla field production. The only overhang for CAIRN India are two. Number one, they have a new management or a new professional management in place, and the parent CAIRN Global. Because when the merger happened, they were left with some cross holding. They are looking at selling that cross holding in the open market. So that, to my mind, is a real baggage for CAIRN India in the near term. But fundamentally, if you analyze that stock in an isolated manner, they are on course to make a cash flow of about $3.5 billion plus next year. And for a commodity company to generate so much of cash flow, and the fact that the management has already gone on record and they've indicated that in the next 6 to 8 months they will be coming out with a big fat dividend, there are a couple of near-term triggers in the when it comes to the next 6 month period. But I want to revisit MTNL, and what a wild ride that stock today seems to be experiencing. Started up, came down, and now has recovered very smartly from the day's low. Mitesh, I looked at the stock and my first reaction is too much of volatility. Should retail investors go close to MTNL?
Too late, Nikunj. I think, we've identified the stock first at 28, giving a target of 35, and then I think a few days back we mentioned a target of 40 on the upside. My only sense is that, I think this is the only one which will not have to shell out as much money for the auction spectrum, and that is what maybe, possibly could give some advantage if it wants to have a pricing war or something like that, I think, but broadly I think technically it's met the target of 40. 48 is possible over here, but I think it's too late to enter. I think the stock is already up 23% for the week, and I'm not looking to buy into it right now.
Ashwini, such a strong bout of volatility could also be an exciting time for a trader. How should traders approach MTNL?
Well, if you look at a sort of longer term chart, it's made a double bottom at about levels about 21. And recently it's crossed these levels about 35, 36, which was an intermediate top. So for the first time, it seems like MTNL may have a good strong upside from here and almost all the way up to 50. Now nobody is saying that from here it will become a multi-bagger, but certainly for the short term, in terms of the telecom space, it's likely to outperform all its more illustrious peers.
Mitesh, what about names like Escomas as well as Optus Circuits, which got hammered yesterday, saw double-digit losses? Does it seem like today is just a one-off day and you're seeing some shade of green?
Yeah, it looks like bounce back from oversold levels. I think Optus Circuits, I'm looking for a price target of 105 to be tested. We have had the stock actually after it broke below levels of 140. It's already corrected by about 17-18% for the week. So maybe some kind of covering will happen as the weekend approaches. But overall, I think the trend is clearly on the downside, and 105 is what I would look for. Escomas, I don't track, so I can't assist you with levels.
Okay, let's look at Asia and what's the picture there. And I think Indian markets pretty much are replicating, the basic regional mood. Hong Kong is down by about 1%. Japan has taken a knock of 1% in an isolated manner. These are not big, big swings. So I think globally things are consolidating. The high tide has not reversed. More than equities, rely on currency and rely on commodities. They will tell you which way money is moving. Dollar is at 1.25 against, euro is at 1.25 against the dollar, I beg your pardon. And then if you look at the dollar index is now way below 82. Ashwini, somewhere, do you think currency market could be a lead indicator of global market mood, because euro is holding on and the dollar index is coming down?
Well, that has led the market in the last few months, because we are in a currency crisis. So as long as, the euro keeps strengthening and the dollar keeps declining, some sort of a risk-on type of environment continues in the world. So even in the US, these are mild corrections to what has been a very, very strong rally. And nobody should mind that, because a market, once it retests, previous key intermediate levels, will retrace, will gather fresh momentum, and then take those levels out with force. So all over the world, we are seeing, mild corrections as markets are at one-year highs, or, US is just 8% from all-time highs. So given that, I think some steam is being let off. So unless the euro starts declining again, maybe below 1.23, you wouldn't get too worried about the market overall.
The other silver lining as well to the markets or economy, so to speak, has been that the other asset classes, that is commodities, have seen a nice little perk up, while equities have been just about range bound. So yes, gold and crude, they have made good gains for themselves, at least in yesterday's trading session. Today, you're seeing some tempered moves coming in there. Ashwini, you track gold pretty closely. Can we see a further uptick, and what's the level now that you're watching out for in gold?
Well, gold corrected 20% from the highs. So in terms of, the rupee value, the rupee depreciated, 20%. So that hasn't really made a difference to the Indian gold prices, which are almost at all-time highs. Even in terms of the dollar prices, I think 1550, 1600 has held on for a long time, and gold has consolidated extremely well around these levels. So chances are we could see, a good strong upside from here, and gold could get back into a rally mode. Maybe 1750, 1770 is the next level. See, after 12-year rally, you will have years where gold does nothing or just consolidates, but people should continue to build positions in gold, because, if the solution to all problems is devaluation or printing more currency, then finally gold will move even higher.
Well, a hard asset is always important, because at a time when generally global growth scare is back, equities as an asset class, they don't do well. So equity as an asset class, it normally outperforms when growth is abundant, not where growth is precious and and it's CAIRN. So yes, gold, like Ashwini pointed out, it is something which should be a must-have of everyone's portfolio, and that's the view I think we've got from Mark Faber, and that's the view we also have got from Chris Woods. And Chris Woods is of the view that gold in the next 6 years easily, globally, could easily, go from current levels of $1,600 per troy ounce to about $2,500 per troy ounce. But IFCI and MTNL, IFCI is still down 13% and MTNL is now marching towards 41, 42. So for traders, these are two exciting pockets of, one pocket of weakness, other one I would say is the pocket of volatility. Let's connect with Gargi, and she's got a long list of some unusual movers.
Well, Nikunj, worth looking at Mahindra & Mahindra, and some news articles suggest that we have some decrease in growth guidance from the company for their tractor sales, which they had earlier forecasted at 10%. They've reduced that to 2%, a sharp cut coming in there. They've said that the sowing land, the decrease in the sowing land, that is one big reason. Also remember that farm equipment has a chunk, has a huge part to play in the revenues that the company gets. So clearly it should be a dampener for the company going forward. 2% decrease on M&M right now. Shree Cements, on the other hand, a good move. They posted their results yesterday. Look at the net profit levels, 352 crores, that's versus 55 crores on a year-on-year basis. Sales numbers also showing a 40% uptick. So on the back of that, a very good move that we've seen on Shree Cements today. Volumes also pretty good. We usually don't see too much volume coming in on this counter. Gujarat and Ari Coke also seeing a good movement today, about 2.5 to 3%, 4.5% now for Gujarat and Ari Coke, as Jindal Steel and Power hikes their stake in a subsidiary of Gujarat and Ari Coke. They earlier held 10.5% in that company. They've increased that by 2.7%. Total about 12.7% is what they hold in this Australian coking coal arm. Remember, there is a coal block that the Gujarat and Ari coking coal holds in Australia, and they've pumped in additional 43 crores in the company. On the back of that, a very good move in Gujarat and Ari right now.
Okay, Karki, we'll leave it at that. But the one really which is creating shockwaves today is IFCI, as the cabinet has now okayed conversion of IFCI debentures held by government to equity. Ajay is here to get us some more highlights in that bit of news story. Ajay.
Aisha, if you look at the sharp fall in IFCI stock today, it is much more than the reported headline that government will actually be converting the debentures. There is buzz on the street that the terms of the debentures are such that government had actually taken it at 0.01%, which is almost free. This is of course completely unconfirmed. So what it actually means is that government is taking a majority shareholding without any, paying a whole lot. Of course, for ages now, government has been giving grant to IFCI. But right now, the current issue which is plaguing the stock right now is that the book value of IFCI falls very sharply. And even the conversion price at ₹10 a share is indicative where the government actually sees the fair value of IFCI, and that is why a lot of shorts are actually piling on to the counter, and we are talking about around 50 rupees downside on the stock right now.
The way to measure a finance company is that you always look at book value. If book value goes down, obviously it could be a case of price compression. That's a very simple that's a sum and substance of why IFCI has taken a knock. Bear in mind that it's got a very large equity base and it's got a very large free float as well. So, traders, they love to feed on such stocks where the news flow is bad, where floating stock is high, and if stock is part of the futures and the options market. Let's take a break. When we come back, we'll connect with Navneet Manot and we'll show you an excerpt of my conversation with the CIO of SBI Mutual Funds.